Good morning, everyone. We'll just wait a few minutes for everyone to come into the webinar. So we'll probably start in about 1 or 2 minutes. Thanks. Launch of our series Fintech Fridays, brought to you by BDO Australia. My name is Aman. I'm the Global Fintech Leader, as well as the National Financial Services Leader. Before we kick things off, I'd like to quickly draw your attention to the housekeeping slide that is currently showing on your screen. To start, you're all automatically muted, but we'll be accepting questions throughout the session, and you can submit these using the question tab. We'll try to get to as many questions as possible. However, if we cannot respond to your question, we'll follow up with you after the webinar concludes. We'll be asking questions today through polls, and we make sure that everyone can answer those as we go along. We won't be using slides for presentation purposes because it's mostly going to be a discussion between us as a panel. If you're experiencing any technical difficulties, please click the support button, which is one of the bottom tabs on your screen. And finally, this session is being recorded, and all registrants will receive a follow-up email containing the slides, a link to the recording, access to register for future sessions, and the speaker contact details for all of us. This is the second year running of our Fintech Friday series. At BDO, we are proud to support the fintech sector. We understand that for the fintech ecosystem to thrive in Australia, it requires the efforts of government, educational institutions, industry bodies, and private businesses like BDO who have knowledge and resources to support fintechs at each stage of their journey and provide a platform to ask questions. Today, we are taking a look at blockchain and crypto, and I'm pleased to introduce a fantastic panel to discuss this topic. I'm joined by Steve Vallas, Deputy Chair of the National Blockchain Roadmap Steering Committee and Chief Executive Officer of Blockchain Australia. Blockchain Australia is a peak industry body that represents and supports Australian business professionals, startups, industry and education sector participants in the blockchain sector. We're also joined by Caroline Bowler, the CEO of BTC Markets, the largest Australian digital asset exchange. It has supported over 270,000 Australian clients trade over 10.5 billion since 2013. Caroline has worked in financial services since 2004 with operational and client-facing roles in investment banking. Caroline then founded the first fintech-focused communications agency in Asia in 2015, and leveraging Caroline's entrepreneurial and financial services experience leaves BTC Markets well-placed to lead the next phase for the digital assets industry. We're also joined by Geoff Rooney, based in our BDO Mittagong office. He's a partner in our financial services practice, and Kris, an associate director in our technology advisory division. So good morning, everyone. Firstly, I'll start with a few questions of Steve and Caroline. We'll talk a little bit about the Australian crypto and blockchain ecosystem. There's a common saying in the tech world that says blockchain fixes everything. Given the vast use cases that blockchain has across all industries and their entire industry value chains, within Australia, the Australian crypto and blockchain ecosystem is gaining momentum as more people adapt and embrace the technologies. However, there is some hesitation. Caroline, do you believe Australia is reaching a tipping point in digital assets?
At the start of this year, I sat down with my team at BTC Markets here in Melbourne and said to them that this is going to be the year. This is going to be the year of crypto reaching mainstream, that we were going to see the tipping point midway through, and from there on in, it was just going to be a period of accelerated growth. That scenario is exactly what we've seen play out on our platform. If in terms of looking at the user profile that we're seeing, that those demographics have shifted, looking at the approaches that we've had from companies outside of the crypto industry or outside blockchain itself, in the more mainstream financial world, if you like, even those approaches that we're having, to me, certainly are indicative that we've reached that tipping point 100%.
Okay, thanks, Caroline. Steve, this is more of a question for you. We're starting to see a huge crypto dollarization trend in the creation of stable coins, where US dollars are being represented on blockchains as digital assets. Do you think that there's going to be a role for a digital Australian dollar as well?
The timing of the question is good, Tim. The RBA released some guidance yesterday with respect to the a central bank digital currency from an Australian perspective. They're on record as saying that they've been investigating the wholesale side of that. They haven't had any sort of real rush with respect to the retail side, but the document yesterday spoke to the issues of retail central bank digital currencies. I think it's coming, Tim, and the reality is that it's being driven, through a variety of jurisdictions. China, most obviously. The EU is very actively discussing the conversation around central bank digital currencies. I think they recognise from a regulatory perspective that they can get ahead of the curve here. This is a technology opportunity that exists for all nations to pursue. I think the United States, there's chatter, but my view in the United States has always been, if they get it relatively close to right, they kind of win, which creates an imperative for countries other than the United States, because we know the capital flows will go to the United States when they get it right. So there is a rush. There should be a rush, and I think the conversation yesterday, as evidenced in the document by the RBA, says there are many things that need to be considered, and I think the case for considering them has grown tremendously in the last 6 months.
Okay, thanks, Steve. Now maybe we'll turn our attention to the national blockchain roadmap. And Steve, I know you're quite passionate about this, given your involvement. There's been no doubt that convergence of blockchain technology with other technologies can add economic value to the range of business sectors. In the roadmap, they talked about they expect estimated global annual business value of over $175 billion US by 2025 through blockchain activities. To leverage those opportunities, the government obviously has established the national blockchain roadmap, and you're obviously involved with that. Maybe you can just spend a couple minutes telling us a little bit about blockchain Australia and industry growth, as well as a little bit about where you've seen the blockchain landscape evolve over the last 5 or so years.
It's been an interesting ride. I think for those that have paid attention for an extended period, the narrative has changed pretty significantly. If we go back to the 2017-2018 narrative, in an Australian context, there were the true believers that had a view of what the space should be, and there was business as usual, traditional business that really didn't pay attention, to be honest. They didn't converge particularly well, and I think it drew a lot of people into the ecosystem, and we're left with some legacy issues with respect to it, primarily around regulatory sort of compliance. And I think the nature of our regulatory framework is such that we're pretty conservative, as we should be, and there are lots of protections in place for the likes of retail investors. I think that's come back into play significantly, because globally the regulatory environments are catching up, and I think they're getting ahead in some respects of where this technology is otherwise going. So we're in a maturing phase. I think the nefarious dark web story that was sold early, I think we've moved away from that happily, and now most of the conversations I have are conversations with respect to infrastructure conversations. The Department of Industry is driving the blockchain roadmap. It was announced in February. They have an emerging tech division, and that emerging tech division includes IoT, it includes cyber, quantum, ML and AI. They're all infrastructure conversations as far as I'm concerned. And in a blockchain DLT environment, I go in and say, we can speak to issues of IoT, we can intersect with issues of identity and data sharing and storage. I can go into an ML AI conversation and say, with respect to what's produced there, we also have a role to play. So they're all conversations which I think are starting to merge. And I think that's the national approach now. The working groups and the blockchain roadmap have articulated a number of use cases, supply chain, credentialing, and soon to be announced RegTech and cybersecurity. These things all sort of intersect, they all overlay. So the challenge of what's the killer app, and I say to people, it isn't a question of the killer app. If you're asking that question, you're actually asking the wrong question. The question should be, how does this impact the infrastructure layer, and in what context do you sit? So that's where we're at now, and I think the government is happily driving a lot of initiatives in those verticals that I've mentioned. And so I think people are starting to see where they might fit into the ecosystem, which is the contextualization that I think was needed to see a maturity in the space.
Okay, and I guess in terms of those economic sort of targets, do you think that those are realistic targets? And I guess in terms of, how are you guys looking to monitor sort of that change in economics that would be able to come back to the market to say, yes, this is working, and we're on track for that US billion sort of dollar mark?
It's an interesting, that exercise of benchmarking, Tim, is challenging only insofar as the definition of what blockchain DLT is, and this is an ongoing conversation we have. There are those that believe it to be and characterize it as a very narrow description. It is a decentralized, distributed, it is Bitcoin-esque, And if it's anything other than that, it's not true blockchain. At the other end of the spectrum, the broad conversation is blockchain DLT, which is very much in that breadth, business as usual, with process improvement. Now, depending on the definition, we can already say we're having enormous effect and influence because we're talking about issues like self-sovereign identity at one end, we're talking about data storage at the other end, and in between, we're talking about all sorts of things that potentially work to make processes better. So definitionally, that ends up being the sort of the critical thing from my perspective. And at the moment, I think that's something people are becoming increasingly confident with. When it comes to the ecosystem, I view it in different parts. The startup ecosystem has lagged, and it's because we don't have deep liquidity pools for one reason, and the understanding has been low. That I think will come. Industry, I'll park for a second. Government needed to show leadership. They've done that. They're doing that, and that's giving confidence to industry. And I think that's the natural mix for us. Bottom up, startups start to be recognised. Top down, government starts to give confidence to industry. I'm waiting for industry. My pressure now is on industry to say, the rest of the world thinks this is a thing. You might want to give it consideration. So that's the direction I'm going, and that's how I think we start seeing some real traction in the space.
Okay, thanks, Steve. And I guess, given my role as National FS Leader, obviously the roadmap doesn't necessarily focus on financial services, per se. Do you think there's going to be kind of a cross section of when people start to uptake blockchain, it's naturally going to flow into the FS sector rather than initially focusing on that sector? Maybe just some thoughts in terms of when the roadmap was considered, why focus on agriculture and education per se versus, what you'd sort of think would be a right topic, just mainstream financial services?
I think it absolutely is already in those conversations, Tim. I mean, I was part of a Chatham House Rules conversation the other day with respect to payment space, and that was all they were talking about. But the challenge is that the implications of this are enormous. It's very hard to have these conversations in all rooms. The conversations in behind closed doors are about CBDCs, they're about the stable coins, they're about micropayments, they're about AML KYC issues. So it's all of the conversations that we have outside of financial services that are happening within financial services. So they are happening as conversations. It's just very difficult for people to be able to talk about these things in a public domain whilst they're still trying to figure out what their respective positions are. And when I overlay the new payments platform, CDR, and all sorts of things that ASIC are sort of driving as well, they are all conversations that intersect with the RegTech and with cyber and all this. So I see them all as a converging subject matter.
Thanks, Steve. I did some illegal things. I wasn't supposed to say yep. So Maddie, I know who you're listening to me. You'll reprimand me after, so apologies for that. So we're up to our first sort of polling question. And thanks, Steve, for that background. The first polling question is, what is the biggest barrier to broader adoption of digital assets in Australia? And in terms of, if you can select one of the answers: regulatory clarity and certainty, managing risk and security, trusted crypto businesses, or integration with existing financial services, that would be great. We'll just check the answers. So I guess, Caroline and Steve, I guess, what do you think is the biggest barrier as we wait for the audience to put their votes in? What's your sort of prediction in terms of what the answer is going to be?
Well, from me looking at it, it's actually, I'm kind of puzzling to try and pick which one is the biggest barrier, to be honest, because I think all of them have a role to play in the adoption of digital assets. But if I think back, and it's not that long ago, to when the internet was still only this terrifying thing that lived in a box on your computer, and the struggle, the journey that there was to kind of get mainstream adoption around that. That's not to compare, apples with oranges, but simply it's about understanding the processes that humans go through with any of these new technologies, the adoption cycle that it takes to get them to become mainstream. I think for me, then probably if I think about it from that lens about what it takes for humans to come around to change, it possibly would be looking at something like integration with existing financial services, and perhaps that element of trust. From a retail point of view, if you like, if we can use those kind of terms. that to me seems to be it. And I kind of think about my own dad and how he thinks about crypto and kind of what it would mean for him to come on board. Probably that familiarity with existing services, but I can see from the poll that's not what everybody else is thinking. But yeah.
Yeah, no, I think it's kind of interesting. I think you're probably right. I think all of these are barriers. I think it's just you know, a bit of a point of view. And Steve, you sort of touched a little bit about regulatory clarity and certainty, and I think we're starting to see more things coming out, you know, in this space. Probably, you know, looking, you know, that trusted crypto businesses, I think, you know, we sort of alluded to it earlier. It's a bit more away from that dark web, and at least that's not sort of a top, you know, a top issue. But I know as we go through the next part of the session, you know, we'll touch on this a little bit when we get to Geoff and Ryan in particular, in terms of, you know, looking to provide assurance over these types of business. So Caroline,
Tim, I'll make one point just with respect to clarity and certainty. It's coming, Tim. The EU is drafting regulation now that is all encompassing with respect to digital assets. There's guidance that's been produced by the Federal Action, the FATF, Financial Action Task Force, that is in play now, that will materially impact this. Jurisdictions are already applying this, and this is the challenge for Australian businesses. I don't have any concerns that we don't have a path towards regulatory clarity, and I just don't want us to wait until it's certain, because the reality is certainty is not an innovative framework for us. We need to work within the parameters, but I'm confident it's coming.
And I think just to make a comment on that as well, like, these things will all sort of happen in parallel to some extent, and we're kind of seeing that play out at the moment. I mean, crypto sort of has grown and emerged in its own sort of systems, you could sort of say, but as it becomes more regulated, then it's branching into the existing financial system, and then the regulatory frameworks follow, and then obviously you're putting in your risk and security frame over that as well. So I think all these factors really kind of drive each other, and that is where you then get, like you're saying earlier, Caroline, that next wave of participants and customers and users and investors into the marketplace.
So just with that, if you want to talk about that wave of adoption coming through, I was looking at statistics yesterday from Chainalysis, I think it was Chainalysis, who showed the curve of adoption of crypto and Bitcoin specifically, and to how it relates to, I suppose, more nefarious activities, dark web and so forth. And they plotted it, and you can see it quite remarkable how the movement is now all on exchange, that the actual use of crypto in those dark web, last 2019, I think it was 1.1% of transaction flows were there. I know that this year, the numbers that came out, it was 0.3% of Bitcoin flows are what the, you know, kind of illegal or whatever the phrasing you want to use on it. So you can really see, I mean, that's driven partially by a reduction in use of it perhaps, but it's also to do with sheer mass of just that mainstream adoption is just pushing all the rest of the uses to minimal amounts, because people are using it, people are getting involved. This mainstream adoption has started. Absolutely. I mean, I know from our point of view, that's definitely the experience that we're seeing on the exchange.
Caroline, I think it's really quite interesting, because the concept that you would be aware of is, in more marketing speak, I'd say, is the concept of social proof and the adoption that people have. And I think that's playing out with regulators, with countries, and then with people that you see on your platform, with blockchain style technology in general. And pre-COVID-19, the analogy that I would use is the dance floor at the wedding. Obviously not appropriate at this point in time, but I use the analogy anyway of when there's that one person on the dance floor, it takes a few brave people then to go in, and then once there's that 5 to 10 people on the dance floor, suddenly it's acceptable and everyone wants to jump on board. And I think that's what we're starting to see here in terms of the tipping point. And so when we're looking at then who's on board and what are some of those case studies, and the example of your father, etc., and thinking, well, who can people reference? Well, if there's someone then in my social network, or if there's a similar corporate, or if there's a similar jurisdiction, I think then it is, well, it's okay. And I think, as you say, then there'll be quite a groundswell.
And I think too, it's also important to make that distinction that technology itself is agnostic. There's nothing wrong with the technology, nothing to be scared of, it's completely fine. It's simply about how we then use that technology. And I think that that needs to be really firmly established in people's minds, because they hear blockchain and there's still perhaps a slight overlay, a slight legacy narrative there that us as an industry, but also more broadly kind of organized bodies such as BDO and organizations etc such as Blockchain Australia, it's incumbent on them to kind of spread that message that the technology itself, nothing to be afraid of, huge opportunity, huge potential for innovation, and something to be really embraced over the next 5 to 10 years.
So Carolyn, I guess just a little bit on that in terms of sort of blockchain and banking and finance. In terms of, I know you're quite passionate about decentralized finance. Maybe you can just talk a little bit about that in terms of how you're seeing that impact, traditional financial services.
Well, I think, this is the thing with decentralized finance and not the narrative around it. In the sense it's going to dislodge traditional finance from memory, because I'm around long enough. I can remember when Fintech was supposed to be doing that, supposed to be dislodging traditional finance. I think all of this is more evolutionary than revolutionary. For something like DeFi, I'm fascinated by it. I think the idea of decentralized finance, somebody taking out that middle layer, it's fascinating. I also think that we are in the absolute foothills when it comes to DeFi. There is so much more to go in terms of getting rigor and structure around it so that people can have confidence where they're placing their money. It's still very much in the early, perhaps experimental stages of it, would be my view. But from a kind of conceptual level, I'm very excited about it. I think, giving people some control back over their finances and decision making is a great thing. I don't see how giving that power as an option, I don't see how that's a bad thing. But equally with that, there seems to be a lot of emphatic talk kind of around all of this technology, that it's a binary choice, it's black or white, it's one or the other. I don't think that's the case at all. I think with all of these technologies, they can, if the marketplace finds that they're a better solution, then naturally that drift will occur. But this idea that it's one or the other, to me, just doesn't ring true to how we've evolved more generally. It just doesn't seem to be the case at all.
And I think, Tim, with respect to the conversation before about the financial service application, portability as an example. This is portability on steroids. This is people saying we're chasing returns. They're not asking their bank and getting KYC'd again. They're literally moving liquidity pool to liquidity pool in an instant. And so that for me is a fascinating thing to observe, that people are chasing yield in a way that we've never seen before. That this went from a nothing at the start of the year to $1 billion locked up, and then $2 billion locked up. And Ryan, I don't know what the number is, you probably know better than I do at the moment, but the multi-billion dollars that are locked up, that are moving in sort of tectonic ways, literally overnight. So that is part of what the future looks like for portability.
And I think that talks to particularly the open, permissionless nature of particularly the Ethereum network, where we've seen a lot of these money flow without barriers to that capital flowing between countries and wherever it's going, really. But it's quite extraordinary, because the pace of innovation is certainly creating the incentive to deploy it into those services.
Yeah, and I think that's a good point, Ryan. I think in terms of, Caroline, in terms of Ethereum, where are you seeing that being some, I guess, day-to-day use cases that the people listening in could sort of relate to in terms of the FS space?
Use cases for Ethereum, is it?
Yeah, in terms of the Ethereum and use case in financial services.
Well, I think that's just one particular protocol. There's so many different options that you can talk to. But where I think Ethereum is interesting is in how it's powering the DeFi engine at the moment. I think if you're looking at, from a very simplistic level, looking at something like smart contracts and the execution of trades that can happen instantaneously and with surety, that's obviously got real implications both for financial services, but for every other commercial sector alongside it. But I think for me, what's been interesting, so blockchain's been around for Bitcoin's been around for 10 years. Ethereum's been around for 5. Look at the scale of disruption that they've managed to bring about in such a tremendously short period of time. Again, kind of to go back to the internet, I'm around long enough to remember how long it took for that to gather this kind of momentum. And so those are the kind of, from a technology point of view, we have to kind of always be one step ahead of the game in terms of where this could potentially lead us. And exactly as Steve has said, at the start of the year, DeFi was a blip on the radar, and now here we are midway through into the end, and look at what's happened. And that has been powered by Ethereum.
Okay. I know Ryan and Geoff, you're getting very excited. I'm getting ready to ask you a few questions. But sort of the last question before we move away from Steve and Caroline for a second is more about the regulatory backdrop. And I guess in terms of, expectations in terms of regulatory over digital assets and how they continue to integrate with finance markets. I guess, first Caroline, I guess your thoughts from the regulatory landscape, and then Steve, just a few quick comments from you on that.
Well, I suppose it kind of mirrors a lot of Steve's opinions too, in the sense that I don't think that you can look at regulation in a country by country silo. I think something like this, by its very nature, is global. Steve made mention to the Vallas travel rule, which for those who aren't familiar, basically will put the digital asset exchanges on the same footing in terms of AML KYC obligations as existing financial institutions, which means the information that we're going to have to send with transactions to overseas exchanges would be something like the name, the address, account number, national identifiers of those of the originator or the beneficiary of the transaction. So exactly the same as what you have with existing financial services. Here in Australia, from what we understand, the legislation that would be required to put that into law is not yet in front of the government, or in front of Parliament rather. But that's not to say we're not going to be exposed to it, because if I look at, just up the road at Singapore, they're already much further down that road, down that journey. And so if we intend to ever transact with an exchange in Singapore, we are obligated to meet that travel rule. So whether we like it or not, that regulation is coming in due to simply that globalization of the industry. So I suppose that kind of harks back to a lot of what Steve had mentioned before. And then the same way, if you're looking at the ESMA with a piece of the framework that they're looking to put together for crypto, looking at the US House, similarly, they've got about 30 pieces in front of them dealing with blockchain and crypto. So there's a lot of outside influences. You can't really look at it from just the siloed country by country nature.
Okay, Steve, any last comments on what you're seeing from a regulatory perspective?
Yeah, the other half of that conversation, it relates to big businesses that are interested in the space. It's Libra-esque. I mean, a lot of the attention is moving to organisations that have, like Facebook, $100 billion sitting on their balance sheet that they can deploy, and they've got UX right. So the implications globally, I think a lot of the attention is moving to those businesses. They're not worried so much as they were around virtual asset service providers. As Caroline said, there's sort of the demasking of some of these transactions makes that a much safer space, literally overnight. The regulatory impact is what happens when Facebook with $100 billion decides to become a bank. How do we stop them from becoming a bank? And I think in the last couple of days, Wyoming gave Kraken as an exchange, they gave them a banking license. So these things are all moving. It's big players that can move markets that are now becoming the attention of the regulators. The virtual asset service providers will need to survive in a more traditional business setting that is more mature than the one that they've otherwise been a part of.
I think that's the crazy thing, right? We're seeing the private issuance of money by corporations, and that's what the regulators are worried about, because it's a challenge to the existing monetary system that central banks in sovereign countries control. So I think that's why we're really going to go through quite a disruptive period over the next few years. As all these competing forces come up against each other. So it's going to be fascinating for sure.
Yeah, well, Ryan, I think that's probably a good point. Obviously, there's that. I mean, this sort of trend was out there even pre-COVID-19, and then you overlay COVID-19, and there's the doom and gloom scenarios about another depression, recession. And then the ability for people to raise money outside a normal financial institution regime does make some people sort of concerned. So and obviously the globalization aspect of it as well. So I think it's but things are moving very quick. So I think before our call, obviously things are happening almost on a daily basis in this space. So it's quite interesting, something to stay close to. I guess Ryan and Geoff.
Sorry, Tim, we do have a couple of questions from the audience that have come through as well.
Okay.
I can just quickly talk to them. There was a question around Bitcoin supply and a couple of technical things, but the supply of Bitcoin being 21 million coins, and what happens if all Australian users on BTC markets decide to buy 1 Bitcoin each. How does that restrict availability? Maybe you want to talk to this, Caroline, a little bit of the economics of Bitcoin, which is always fascinating.
Nice conversation. And from my point of view, if everybody in Australia wants to buy 1 Bitcoin, go ahead through BTC. They're currently trading at 15,000 Aussie dollars
for business.
Bring it on. Yeah, exactly. We'll be very happy to take your business. But from the point of view, I think Bitcoin's fascinating because of its deflationary nature. The fact that you've only got 21 million of Bitcoin that's ever going to be produced. So you have that surety, which plays really nice as a contrast with what we're seeing this year, obviously with the money that's being pumped out in response to COVID, and in previous scenarios where the response has been from the central banks to put more currency into circulation. Where I think that's of interest too is that it's almost an economics 101 story for a lot of people who weren't previously familiar with what deflationary and inflationary assets and what they really mean. And I know for me, with my kind of banking and financial services hat on, that's a really compelling argument for me to get involved and to get involved and interested in what Bitcoin can do. But yeah, but I think too, there was often the discussion about, well, is Bitcoin going to be used as a medium of exchange, or is it the investment, similar to the digital gold analogy, which has been drawn out quite a lot. Personally, I think that digital assets is the umbrella term, cryptocurrency being one pillar underneath it, Bitcoin being the biggest player in that cryptocurrency space as it stands at the moment. I don't see these as trying to nibble into any other investment opportunity, personally. This isn't investment advice, I'm not an IA, but instead I see it more about becoming a completely separate investment opportunity within and of itself. So rather than it's trying to become digital gold or nibble away from digital gold or any of the other investment opportunity or asset classes that are out there, I think it's going to be freestanding in and of itself. And that's will be, that's just for Bitcoin. The other cryptocurrencies each have got different use cases, and so each kind of, like, so Litecoin, for example, being the kind of forgotten child of Bitcoin, and its whole purpose, again, it's limited in the number of coins. I think there's like 81 million Litecoin that will ever be made, but the purpose of Litecoin is to be used as a transaction tool as opposed to an investment tool. So all those different kind of flavors out there. I could talk for days. Does that answer the question?
Yeah, I think so, and I think the short of it as well, if all Australians were to buy 1 Bitcoin, since the supply is fixed at 21 million Bitcoins, and the supply issuance can't change, then the price is going to go up because it's a purely inelastic supply essentially. So it's a good economics graph, I think, for people interested. But that should answer that one, I think. And there was also another one just on the regulatory side, Steve. Is Australia lagging behind Europe and USA in regards to confidence and acceptance around regulatory? I think that was the question that came from the audience.
Well, I don't think we're lagging because we've got a great regulatory framework. I think the reality here is that these are new initiatives that are being sort of driven, and it's easy for our framework to plug in. I mean, ASIC and the like have bridges with other jurisdictions, so they're talking at the moment. So I don't think we're lagging. I think what's happening now is some countries will naturally lead. Australia, I think, has a conservative stance with respect to this. So I think we're looking to what Singapore are doing. We're looking to what's happening out of the EU. We've got a strong relationship with the UK. So I don't think it's anything that is a divide that we have to worry about, as long as we're at the cusp of the conversation.
And I think, Steve, in terms of regulatory certainty and people seeking it, obviously there's some level of minimum viable regulatory certainty which people do require. But if you look at sort of other industries, within in general, but also financial services, if people are hoping for really set in stone regulatory certainty, that's never going to happen, because if you look at some of the traditional banking, insurance, or superannuation sort of markets here, the regulation is changing all the time, and so I think people will just need to get some level of being comfortable with being uncomfortable. If there obviously is, there needs to be a framework which people can apply, but that framework will be evolving over time, I think, and so people should be comfortable that will be the case.
And I think a good simple example too, Geoff, is Uber as an example. Uber didn't wait for regulatory certainty. Whatever you think about that business, they went into jurisdictions and they fought regulation. They led with innovation, and you said, regardless of where you sit on either side, ultimately there's been compliance or they retreat from markets. They didn't say, do we fit? They said, this is what we're building. How do we fit?
Ryan, is there any other questions that have been coming through that we want to answer now or no?
I think we're up to date, so that's good.
That's good you're looking at those because I can't see those coming through coming through the screen. So I guess if we just sort of shift gears slightly in terms of, I guess, assurance and safety and sort of this market, I guess from Ryan and Geoff, from your perspective, as organizations start to adopt blockchain, what are some of the key areas of focus that they should be considering as they go down that particular journey? Geoff, I'll maybe start with you.
Look, I think it's important, and we've sort of covered a lot of the topics. So today's about being, well, look, the technology itself and the adoption of this technology is one part of the wider ecosystem, or one part of the wider value chain. So it isn't necessarily the panacea for all evil itself. And then really it is, depending on what size of organisation you are, large, small, and your risk profile. What we've sort of been seeing, and as I sort of talk to people in the market, it really is about what is their risk profile in terms of adoption, and how do they want to have maybe a safe sandbox or a comfortable proof of concept, and then how does that fit within their wider organisation? Obviously, smaller startups, that's what they do, and the risk profile is higher, and so there is that agile, fast develop, learn, implement style of process. If you're in a larger organisation, slower to move, more risk. If you're at the top of the hill, you've got more to lose than someone who's at the bottom of the hill climbing, and so that tolerance for risk and the tolerance for failure is less. Domestically, with the banking royal commission, etc., people don't want bad press, and the risk of failure and brand damage is high. And so having to take this innovative technology and solution and then put it through a more traditional risk management framework, testing cycle, etc., legal review, it is a slower process. And so I think that same technology, very different ways in which people can apply it and have a speed to market. And so I think that that's quite interesting. The other piece, from a human factor point of view, is I think it's quite interesting to see, so startups by their very nature, fast, technology focused, etc., etc. If you then go, large bank, large organisation, you want to buy that technology because the innovative nature of it, etc. That's great. There's a lot of value there. You buy it, you bring it in-house. The real risk is you kill it, because you take, the people who want to be in that fast, development, startup culture, they've gone there for a reason. They haven't gone and worked for a large bank. So you've got to be careful in terms of the balance of how organisationally you structure it, so you don't kill the creativity which you wanted to buy, which has the value. Ryan, you'll have a view, I'm sure.
Yeah, look, I think the point I sort of pick up from your comments there, Geoff, is around the risk profile of the organisation. And as I think about, and as I see sort of the broader growth of digital assets and crypto assets and blockchain in the ecosystem, it's certainly, you've got that initial development through some of the smaller startups, but then you've also got some of the larger sort of enterprises looking at blockchain in innovation labs and in proof of concept kind of models as well. So there's going to be different, and then you've also got the investor side as well, right? You've got asset managers, and you've got the service providers like Caroline's business, who are all part of the ecosystem. They're all going to have different risk profile, different risk management framework that is relevant to their business. And I think that just needs to talk to what they're exposed to and what some of those threats are. And that's where it is quite important for that to be really, on the first page of any type of initiative or works in this area, because there's just so much that can go wrong, unfortunately, because it's a new, I'd say new, even though Bitcoin's been around 10 years, but there's a lot of other things happening around the edges, particularly when you get to smart contracts and some of those assets, where you've got networks which are highly programmable and can do a lot of different things. and they'll be designed in different ways. So there's different types of risks to be considered, and we're seeing lots of funds, both with services being built on blockchain, on open blockchains like Ethereum, like we were talking about before, but also then for service providers who need to consider some of those traditional security controls that they need to have in place. You know, there was a hack I think it was last week in Europe, and it was an exchange. They lost 5 million from their hot wallet. So don't know what the cause was, but something's been compromised. There's been a lack of controls in place, or potentially monitoring to detect something earlier to prevent it. So there's also those traditional, not traditional, the important security controls, technical security controls that need to be in place, and also the organizational security controls. So that training awareness, those incident response plans, which go hand in hand with your technical controls. So yeah, that's, I think I've talked a little bit there.
I think,
Yeah,
so reinforcing that comment as well. I mean, I know there are some people I've heard in the ecosystem that say there's no place for consultants in this space. You go, of course there is. It's ridiculous to say there's no place for consultants. The skills don't live in most businesses that are looking at this. The ASX 20 businesses, ASX 100, ASX 200, will not build without consideration to the consequences. So where does that domain experience exist? And often it exists outside of those businesses. So issues of governance, tax implications, audit and assurance, they don't live within these organisations. Of course, they need to go into organisations that have dedicated resources that can give it consideration. So there is a place. It again goes back to the definition of what the broader blockchain DLT ecosystem is.
And that talks to putting these frameworks, policies, controls in place, but then having, maybe you want to talk to this, Geoff, but having that audit in place as well to verify, validate, and then provide that assurance and trust that you've gone through that process.
Yeah, it's exactly that point. I mean, you have conversations, it's like, well, you see the media, it's the death of audit, you know, blockchain, see you later. So look, I thought about handing in my audit certificate last week, but then sort of thought, no, look, there still might be a job for a short period of time. And so I think it's the point around, you know, it's a new technology, and it will solve a lot of the problems, and it will remove a lot of the barriers in terms of trust and also you know, cost, etc., across the system. But it's part of it's part of the system that we have now, and the system won't change overnight. And so it's like, what else across that value chain? What are the risk controls and processes in which the new technology interacts that is important? You know, the on ramps, the off ramps. You know, garbage in, garbage out. If you're not able to trust what's being put onto the blockchain, fair enough, it creates an immutable record, etc., etc. But you know, if you're not putting the right things on and you don't have the right controls at that point, then you're just trusting something which is inappropriate. And so I think there is an ongoing need for audit. If we look at where does audit lie, or what are we seeing at the moment? We're seeing people looking to get, say, smart contract audits at the outset, because you'll typically engage your lawyers, etc., to help. You'll engage your coders to then sort of code up the technology. Great. But then, is it doing what you think it'll do on the tin? One is from a technical specialty point of view. You know, does it function as it should? And it's not a broken smart contract. But then, really, someone looking at understanding how does that smart contract interact with, particularly if you're an existing organisation, with your existing core processes and policies that go downstream. And so that's quite important. And then as a financial statement and sort of controls assurance auditor, it then comes to, how does that smart contract then interact with your financial statements and your accounting records? You know, how does it interact with, you know, potentially with AML type regime and client money, you know, your AFSL license if you have one. So there's a number of other downstream pieces, which is, if you're not thinking about those downstream, you know, traditional, you know, financial statement, risk and control, disclosures, etc., if you don't have the right people around the table to think about those at the outset, you don't necessarily design your smart contract in the right way. And it's obviously more expensive and more cumbersome to go back afterwards and to recreate that. And so what we're advocating for, one is that there is definitely still a role for assurance, you know, around the ecosystem, particularly at this stage where that adoption and trust factor is still there. And so that helps in terms of the trust in the community and avoiding there being failures as best possible. But also, we can't necessarily as a group fall in love with the technology, and it's easier for me to say that as the non-tech guy, but I think it's too much. There are some people who are great advocates of the new technology, but having technology people at the table, but having other people at the table as well, like a traditional business, growth and development strategy, is important. So you need to have your legal people, you need to have your risk and compliance people, you should have your accounting folk at that set, so that you get the balanced view in terms of the design of what you're implementing. Would definitely is our suggestion.
And if I may just pipe in here, only because looking at the group that we have, I'm possibly the only person who hires consultants and who makes decisions for us over the course of this year, and we've worked quite extensively, and we do, and naturally, as Steve has said, we don't have in-house all the skills and capabilities that we need to function as a business, and we look outside. Our single biggest issue is trying to find organizations that have an understanding and not squeamish around blockchain and digital assets. So, it's very refreshing to come into an organization such as yourselves and to hear the conversations that you have. You're not the only ones out there, but there aren't that many. I think it's probably the point I'm trying to make, that have that level of comfort and ability to understand, because it is still quite nuanced. There is still a lot to it and complex to understand. So just to make my point, there is somebody who actually hires skills.
Well, I think you're right, Caroline, too, is that it is nuanced, and people need to be aware and understand it, and you need a diverse range of capabilities. So you need people from a consulting side who know tech, who know legal, and sort of know their assurance piece, and also an ability to play nice, because I can probably assume that you don't even just get one sort of consulting brand, and so you need consulting brands who can work nicely together and have that kumbaya moment to make it all work, and so that's important as well.
Well, I think everyone plays very nicely under me.
That's good to hear. Good to hear. But I think it is quite topical, because I mean, I had a conversation with someone yesterday, and they asked, do we audit blockchains? And so I think there's a bit of an education piece in terms of what can be done in this space in the market. Because I do think, and Geoff, I know you and I have been working on a few funds that are looking to launch, spending a lot of time on preparation in terms of internal control reports, etc. I think people are a lot more familiar with a normal GS007 controls report. When you overlay this with the blockchain or a fund that's using cryptocurrency, it adds another layer of complexity. It's still the same concept, but I think it's we're probably going through this education journey. But it's good to see. And I think we are getting known as at least a firm that people can talk to in this particular space, because we know some of our competitors, until there's more certainty, they're determining it's too risky to take a look at it. So I do think from a BDO perspective, it's a great space for us to be able to play. I might kind of shift to, we got a whole bunch of questions before the session, and since we have such a great panel, I thought I'd just ask a few sort of questions kind of going around the grounds here. Steve, I'll probably start with you. Do you think that people are going to be looking to build their own blockchains in the future, or do you think they're going to use existing blockchain technologies?
I think there'll be a consolidation with respect to a lot of use cases. Something like Ethereum, the dev pool in Ethereum is enormous. It's easier to build on that. The confidence will build. The RBA, as I mentioned at the start, we're doing some trials on closed versions of the Ethereum network. So it's going to be a horses for courses exercise. I think, in due course, there are significant costs associated with building these things out and maintaining them. So as is the case with a lot of other infrastructure, we won't have hundreds of service providers that all can make this business work for them. So I think it'll develop in the same way as a lot of the other ecosystems around infrastructure have developed.
Okay. Caroline, what impact, if any, will quantum computing have on blockchain?
And that's a really interesting question, because the whole point with quantum, is the speed of the computing power, and with blockchain, it's supposed to be about how the crypto itself is unbreakable. I'm actually reading about it. There's two schools of thought: those that think it'll have no impact whatsoever, and those who think it will be, the undoing of it. To be honest, I can't give you a qualified answer to that question. I think you probably need to go and talk to the guys at RMIT. They probably have a better handle on it than I would. But to the point being, what I also think is really fascinating is how Australia has been such a leader in quantum computing, and similar to how it's taken its outsized position in blockchain technology worldwide too. I think it kind of speaks really well to how technology is being embraced, new technology is being embraced, and innovation is being embraced within Australia more broadly. So it's a win-win story, for a local story anyway.
Okay. Ryan, in the age of quantitative easing, what would be the advantage of moving the Australian economy from Australian dollars to Bitcoin Cash, BCH cryptocurrency?
It's a bit of a loaded question, I think. I don't think we'll actually be moving the Australian economy anytime soon to a cryptocurrency, particularly Bitcoin Cash, which is a fork of Bitcoin. So that's another, I won't dive into that one. So look, I think it maybe goes around to some of the stuff we were talking about earlier, Caroline, around the fixed supply of Bitcoin, which is, it's very transparent. You know your supply curve in advance, what the inflation rate will be. There's an advantage certainly in that versus the current process with issuance of money, but yeah, I don't see any transition soon. I think that it will, Bitcoin will be in a space with hooks into the financial system that we're seeing now.
So that's your official view. Yeah.
So if I may,
no immediate change. Yeah.
Even jumping in, but if I may too. So I would agree that I think that we shouldn't be looking about these as just monoliths, as in there's just one answer. And I think this is something we keep coming back to. A lot of these questions I get asked around cryptocurrency and digital assets. There doesn't have to be just one. There's many different use cases for this technology, and we're not looking necessarily to replicate or replace. Instead, we're forging completely new paths, as humans have done, human society has done throughout its history. We used to use seeds for cash, for crying out loud. So there's a lack of imagination to think that we can't use this new technology in a new way. So just to kind of jump in on your point there, Ryan, too. So crack on.
And Caroline, like, here's the follow-on. I spoke to someone last week with a startup that is using the CDR to create a RegTech solution that utilizes ML and AI that will live on a blockchain stack. Yeah. That's the business. I mean, we're taking the CDR that is just rolling out, and we're saying this bolts on as a RegTech solution. There you go. So that for me is a blockchain conversation, even though only a small part of it is a blockchain conversation. So that's for us. So when we all get it, we get excited because they're the kinds of solutions I'm excited about helping grow in the country.
So Geoff, and I know we've got a few more audience questions. So Ryan, I'll turn over to you in a minute because I know you can read them more easily than I. But Geoff, just one for you in terms of tokenization versus securitization. Are they fundamentally the same?
I think it's an interesting question, and I could spend a whole webinar perhaps sort of unpacking that specifically, and I quite like, I'm on strict instructions in my notes, so I won't dive into a detailed conversation around securitization. But I think it goes to the point of saying how we're using new technology to overlay sort of traditional, I'll say, processes. So effectively, tokenization in its simplest form is taking a physical asset and then putting it, in this instance, say on a blockchain or a smart contract to say, well, it now is easily, and it's got some key attributes. One, probably increasing its liquidity, and so it's tradable. There's the programmability, and so particularly with securitization, there are a lot of manual processes that go with it. And then really it's the proof of ownership, because you want to be able to take an asset and say you own, and you own it. What part of it do you own? Securitization is a very similar concept in that you're taking an asset, or you're taking a pool of assets, package it up within a legal construct, putting them into a vehicle or SPV, and then issuing certificates or others, maybe in a waterfall style arrangement, to still give you similar ownership of the asset or the cash flow. So it's basically a similar concept, that they're just using some different technology. And so will you be able to tokenize everything? Perhaps not, and definitely not overnight, but there are definitely some easier and more sensible use cases where it can and should be applied. And so I think that the horse is out of the gate, and we're not going to be able to shut the gate now. It's definitely happening. And so I think it's I always like the quote from Thomas Watson, who was the president of IBM in the 40s, who said there's probably only a use case for about 5 computers globally. And so, Caroline, I go further back even than the internet, because you've already stole my internet quote. So I think that's the same piece of, look, we'll how much will be tokenized? It's a question, but it's definitely, the answer isn't 5, I'd say, Tim.
Okay, thanks, Geoff. Ryan, maybe because you're looking at some of the live audience questions, maybe you can pick 1 or 2, and then we'll go to our final poll after that.
Yep. Can we expect higher amounts of funding of blockchain and crypto startups in Australia, given the increase in investment in the industry in 2020? I think that's a good one that talks to the ecosystem.
Are they expecting it from government or from private investment?
Probably just general, whether that's private or, yeah, just general question, I think.
Your response?
Yeah, if they're not going to do it locally, they'll encourage international investment. We can't wait. I mean, I announced something today that's an initiative between Austrade and the Israel startup ecosystem. If we can't wake people up to the opportunities within Australia, we're not crowding those opportunities out. So I'm encouraging inbound investment if we won't support our own initiatives here. So, that's the general view, right? It's coming from somewhere, and we'll grab it from somewhere.
Okay, Ryan, time for one more. Why don't you pick one more question?
Yep. And with so many projects, list of blockchain projects coming online, how do you see financial professionals planning to accommodate accounting and audit of client funds? I think this talks to if there's Ethereum and other networks. How do you keep track of them all and have the process in place for that?
If I may jump in there, I'm not an accountant, but that doesn't stop me. So what we're doing actually is we have a pilot program at the moment with a number of accounting firms, small accounting firms, to deal with SMSFs. And so what we're doing is rather than waiting, we're being active, as Steve has suggested, and gone out to the market and said, we know our clients need help with this. We know that you guys are the best in the business to do this with. Let us come together and be that bridge and bring it together to kind of educate at very much grassroots level, so people can come in and get comfortable and build out their knowledge and kind of shed and spread that knowledge then more widely amongst the accounting profession and financial professionals. So we haven't waited. We've taken the initiative and gone ahead and done it. I think too that instead you're going to see, and I know that probably Steve is in a better position to talk about this, but I know in Melbourne, the universities and other third level institutions are actively taking a part in including cryptocurrencies, digital assets, etc., as part of their curricula. So from a technology and also from a banking and finance point of view. So the next generation that are coming through will all have these, and be very conversant and very familiar with it from university level onwards. Am I correct in saying that, Steve? Have I missed any?
No, there is a recognition now that there's a demand for this subject matter, and at both ends of that spectrum, at a high level executive style, but also just a functional skill perspective as well.
I think, Caroline, it's music to my ears, the commentary around your pilots in self-managed super funds, because I'm an interesting guy, so I'm a self-managed super fund auditor as well, and so I think that exactly what you're saying is right. If you're a self-managed super fund, and if we use this as the example, you've got cash, you've got property, you've got assets and shares, and then you'll have some digital currency as well. And so, how does digital currency act effectively similarly to those other asset classes? So it's on a platform, there's controls around it, there's a data feed that can be relied upon, hence the existence and valuation from an audit point of view is consistent with those other asset classes, and so that then makes it all very much mainstream and easy and useful to audit. And then you've just got other asset classes, which are the gold bullion, the racehorse, and the artwork. And so I think it's an interesting transition of cryptocurrency moving away from being along with the racehorses and the gold bullion and the artwork, and coming more into that sort of mainstream listed security type space, which makes it better, faster, and cheaper to audit and account for. So I think that's really the transition, and it's good that there are people like you who are advocating for that move.
Absolutely.
Yeah, Geoff, I knew you'd be thrilled about SMSF. I knew when you heard those initials, you'd be happy. I am a bit mindful of time, so I might try to come back to our sort of final sort of polling question, and this is more just sort of the future of crypto usage in Australia. So if we can get the final polling question up, what is the future of crypto usage in Australia? Bitcoin as an investment, stablecoins, digital dollars for fast global payments, Ethereum for open decentralized financial services, crypto assets on blockchain. Again, we're not allowed to vote, but I guess for the audience out there, if you want to click some responses, that would be quite good. I guess again, before we get our responses back, I'm not sure, Steve and Caroline, if you have any particular views of how you think people will be voting on this poll.
Well, personally, I think all of them.
Yeah, I think the studio. Yeah, I think most of us would probably say that. But I think is there, Steve? Do you have any? What do you think in terms of if you had to pick one? What do you think the audience is going to say?
I think traditional finance and the tokenization, securitization means that crypto assets on blockchain as a digital representation, one way or another, is coming. Whether that's the very simple version that says it's reflected as a digital twin versus a tradable commodity, I think that's the natural maturation of the space.
I would agree.
Okay, let's see. Do we have the results in? Steve, you must have voted. You probably.
I think you cheated. I think you must have cheated to see the answers. Yeah.
So that's an interesting one, and I guess Caroline, it sort of echoes your sentiment about all of them, because all of them have a pretty good percentage. So I guess I think there's a great road ahead in terms of sort of the blockchain and crypto usage kind of in Australia. So one of the things that we will be looking to do sort of after this session is look to reach back out to Steve and Caroline to see if there's any particular follow-ups. There has been a few questions that we weren't able to get to. So what we'll look to do is we'll come back to the panelists to see if we can put this down in writing and revert back to you guys, just so we can make sure that we've responded to all of your questions. But again, we're just a few minutes over, so I appreciate everyone sort of staying on the line. And this brings us to the end of the discussion. And big thanks to our panelists, Steve, Caroline, Geoff, and Ryan for your insights. And hopefully everyone online thought this was a useful session. You'll see on screen that we've got another Fintech Friday coming up in October on the 16th. We're talking about payments. And then we have RegTech, which is going to be obviously quite topical. And then we're going to finish the year more on a capital markets look back and a look forward, a 2020 and a 2021 look forward. And then we'll look to be picking this up again when we get into 2021. So we'll be sending out the slides, all the materials in terms of contact details for everyone. And I know we'll send out a quick survey that if people can just complete that after the fact, that'll be good, so we can look to improve this on a go-forward basis. But again, thank you, panelists, and thank everyone for listening, and everyone have a great Friday. Thank you very much.
Thanks all.
Yeah.